Emerging markets is one of the areas economists think that can provide a bright spot for this year and beyond. Joining us live to talk about this more is Nicholas Pardini, managing partner at Nomadic Capital Partners, joining us live from Santa Monica. Thank you very much. You know, it's been an odd last 12 months because some of the developing countries, for example, if you look at the markets, have been on an absolute tear, whereas these developing countries or emerging markets have had a bit of a rough go. What's happening here?
Well, I think the reason why developed countries are rallying is more because of monetary policy more than economic fundamentals. Outside of today's job numbers in the United States, economic data for the most part has been disappointing expectations when you look at manufacturing PMIs, retail sales, factory orders, and other measurements of quality of the GDP numbers in the West are declining, but people are buying because they think there'll be more monetary easing. Whereas in the emerging market countries, they don't have the same flexibility when it comes to easing because their inflation rates are high and they have positive real growth rates. And so that is going to causing the temporary divergence. But I think this is a long-term buying opportunity for emerging economies.
Okay, so you say it's a buying opportunity. Of course, emerging economies is a very broad term. There's a lot of places around the world. Let's start with the top pick. What's the one place that you would look at to make some money here?
Well, I think in terms of valuation, the ones that I'm looking at that tend to have the best valuations actually are probably ones that you wouldn't think of: Vietnam and Egypt. They may go down another 10 or so % from here, but they're the only two of the emerging market economies that are trading under their historical market cap to GDP averages, because investors are afraid of, in Egypt, in the case of social unrest taking apart the regime, and in Vietnam, you have issues related to embracing reforms that help further privatization of the economy.
But isn't also one of the issues too for a lot of these countries? For example, let's just take Vietnam. The stock market, the capitalization is relatively small, and for investors outside of Vietnam, there's not that many ways to invest in Vietnam if you want to.
Well, the way you trade both of those is they're U.S. listed ETFs, EGPT for Egypt, VNM for Vietnam. But for more bigger emerging markets that I think have the best long-term growth prospects, I'd say the Pacific states in Latin America, such as Chile, Colombia, and Mexico. Because with increased labor costs in China, more manufacturing will be moving there, and they have very business-friendly and open-to-trade policies, which is bringing in a lot of foreign capital.
What about the old school BRIC countries? I mean, there's 5 of them: China, India, just to name a few. Are those still on the radar?
It really depends. I mean, each of the BRIC countries has different fundamentals. China's stocks, after the sell-off on the Shanghai index, are actually trading at fairly reasonable valuations here. It's just that hard landing concerns continue to persist in China, and we should expect to see somewhat slower growth in China. But there may, I think, probably like a year from now, be a good buying opportunity there. India has too many infrastructure issues and slow embracement for reforms that would fix like some of the structural and state control related issues in the Indian economy. So I'm still pretty bearish on India. It might actually be a good short opportunity here.
All right, Nicholas,
Russia.
Let me stop you there. Quick question: what is going to be the #1 challenge now facing all of these emerging economies for the rest of the year?
I think the biggest challenge facing emerging economies is economic weakness in the West, and those who are export dependent, such as China, are going to have problems because there's going to be less demand for their goods. They're going to have to be able to kick up more strength within their own consumer populations versus relying on U.S. and European buyers for their exports.
Nicholas Pardini, managing partner at Nomadic Capital Partners, thank you very much for joining us on BizAsia America.